Welcome to today's Explainer. We're diving straight into some absolutely foundational insights from the finance official source material. We're tackling something that literally affects all of us, investing for beginners. You know that feeling when you look at your savings and it just feels like your money is sitting there doing absolutely nothing? Well, we're going to completely change how you think about that. We aren't just crunching numbers today. We're going to visualize exactly how wealth is built from the ground up.
All right, I want you to imagine two totally different paths for a single $100 bill. First, there's the super cautious route, right? Taking that $100 in cash and just tucking it under a mattress. Sure, it feels safe, but it just sits there. It's stagnant. It's going to be exactly $100 forever. But think about the alternative. What if you take that exact same $100 and invest it into growing businesses? Suddenly, you unlock the potential for it to multiply into hundreds, maybe even thousands of dollars over time. It's the exact same starting amount. It took the exact same effort to earn, but man, the outcome is just wildly different.
Section 1. The power of investing. Money working for you.
So, what actually is investing? Basically, it just means putting your money into assets that have the potential to grow in value over time. It's kind of like planting a magical seed. You take your hard-earned money, plant it in the fertile ground of the financial world, and you let it nurture. Over time, it grows into this sprawling money tree. And the branches of that tree, those are the companies and assets you've invested in, standing tall like massive office buildings. You're no longer just hoarding cash, you're actively cultivating growth.
Now, here's where it gets real. When you compare saved cash to invested money, a pretty stark reality hits you. Your saved cash is actually shrinking. There's this silent enemy out there called inflation, and if you're only saving your money, inflation is just steadily eating away at its buying power. $100 today simply will not buy you the same amount of groceries 10 years from now. But contrast that with money invested in businesses. Investing actually helps your money grow faster, acting like this rising protective shield against the constant drain of inflation.
Section 2. How stocks actually work. Owning a piece. When you buy a stock, you literally own a small piece of a company. Honestly, it's that simple. Imagine a massive corporate office building, right? But it's divided up into thousands and thousands of tiny little pieces. When you go out and purchase a single stock, you are buying one of those tiny pieces of that massive building. You actually become a part owner of the business. I love this because it takes this abstract, sometimes intimidating financial concept and makes it so tangible. You aren't just buying a bunch of random letters on a screen, you're buying a brick in a real, breathing business.
So, as a part owner, how do you actually make money? Well, there are two main ways. First off, stock prices increase. As the company grows, innovates, and just becomes more valuable overall, that little piece you bought, that becomes more valuable too. Eventually, you can sell it for way more than you originally paid. That's what we call capital appreciation. The second way is through dividends. This is where a company takes a chunk of its profits and just drops it directly into your wallet. It's literally a cash reward just for being a part owner. So you've got these two distinct, really powerful engines working together to build your wealth.
Section 3. Balancing risk and reward. Finding the balance. Here's the fundamental rule of the game. Lower risk inherently means lower potential returns. And on the flip side, chasing those higher rewards, well, that comes heavily weighted with much higher risk. The source material is super clear about this universal truth. Every single investment out there carries some level of risk. The market has natural turbulence, meaning values are going to bounce up and down. If you're going after those higher potential rewards, you just have to accept the higher risk that comes with it. And honestly, that requires keeping a really calm, focused, and totally unemotional mindset when the market fluctuates. So how do we actually manage all that risk? The absolute best solution is diversification. Basically, by splitting your investments into distinct sectors, think technology, healthcare, energy, and retail, you build this incredible shield for your wealth. It's the old golden rule, right? Never ever put all your eggs in one basket. By spreading your money across entirely different sectors of the economy, you massively reduce your overall risk. Think about it. If the tech sector hits a bump and has a really bad month, well, your healthcare or energy investments might be thriving. It keeps your whole portfolio steady and balanced.
Section 4. The winning strategy. Start small.
Okay, we need to clear up a massive misconception right now. You absolutely do not need thousands of dollars to start investing. For so many people, the biggest psychological barrier is this totally false belief that you need a huge lump sum of cash before you can even call yourself an investor. But the reality highlighted in our source material is that starting with small amounts consistently is what makes the actual difference.
Just picture a calendar flipping forward, month after month. Investing just a tiny, comfortable amount every single month sets the stage for monumental success. Consistency is going to beat a lump sum every single time.
Let's look at how this plays out over time. In year 1, honestly, it might not look like much is happening. It's just a tiny seed that's been planted. But wait until year 5. That's when steady growth becomes really visible and honestly, pretty exciting. And by year 10, wow, that initial investment has compounded into massive, deeply rooted wealth. Seeing a timeline like this proves that successful investing is all about patience. Time is literally your absolute greatest advantage. The longer you leave your money planted in the market, the more it compounds and grows.
So the crucial takeaway from this explainer of the finance official material is this: investing is entirely accessible. It is absolutely necessary to fight off that invisible drain of inflation, and it relies heavily on diversification, consistency, and above all, time. So here's my question for you. What are you going to do with your next $100? Are you going to tuck it under a mattress where it'll just slowly shrink away? Or are you going to plant it and let time do the heavy lifting? Thank you so much for joining me on this explainer. Keep learning, keep that calm investor mindset, and I'll see you next time.